Good evening, friends.
Good evening.
Once again, loud good evening.
Good evening.
Yeah, wish you warm welcome. And now we have a very interesting session. We have two speakers, Mr. Manu from Hyderabad. Okay, he specially traveled for you, and he will be talking one new innovative subject called Family Office. And then second speaker we have a Sailesh. Again, he has traveled from Chennai. He is also Family Office professional. So we have two back to back. You can say one step above the financial planning. It is known as a Family Office. Over to you.
Thank you, sir.
Yeah.
Good evening, everybody, and it's a pleasure to be here. So my name is Manu. I am the founder of Wektra Family Office. So my colleague, Mr. Tito, is here. He's my partner and co-founder. So there's a link. So he is the one who gave me the intro to Keyur, sir. So Tito attended his session first and then motivated me to attend. So that's the link. So let me get into it. So my journey. So it's a fairly interesting journey. So I have known faces here. So I come from a techno-functional background, both technology and finance mix. So I'm basically an electronics engineer. Worked in the IT industry, and then went on to do my MBA and CFA. And I graduated during the year of the Asian financial crisis.
Just you said CFA.
CFA. Yeah.
That's
the Chartered Financial Analyst.
It's different from this one.
Right. Yeah, that's more on the financial analysis side, not on the personal finance. So I graduated during the Asian financial crisis, and obviously had trouble getting a finance-related job. So I went back into technology. So I had a pretty good ride. I rode the technology boom in India. So my experience with investments goes very long back. So my first equity investment I made in 1994. So the strategy was pretty simple. IPOs were all at 10 rupees. So you could, and it was almost like a lottery. So you could get in, and when it gets listed, you get out. So I had invested in companies like King's Aqua Marine, Global Foods. I don't think they exist anymore, but sorry. Yeah, missed out on that.
Any 47?
Right. So this is all about that Wipro 500 times, right? So at that time I didn't have a mentor or a CFP to advise me. Otherwise, probably I would have selected that. So that's what happened. And then 1998. So because you work in IT, so you get ESOPs and all of that. So I got exposure to US equity also. 2001 was when I invested in mutual fund. So there was a fund called Zurich. How many of you have heard about Zurich mutual fund? Yeah. What is it today? It's HDFC, right? So I am a sort of guy. So there are two types of people who invest in mutual fund. Somebody who looks at the fund and the strategy and all of that. There's a class of people who are married to the fund manager. So Zurich, Prashant Jain was with Zurich, and then he came into HDFC mutual fund. So even today I hold the HDFC mutual fund. So I'm like married to the fund manager kind of guy. So obviously he disappointed in the last few years, but again, as somebody said, it's coming back, right? So that's the story. And in 2006 I made my first private investment. So Tito comes with product distribution, broking. So his father founded a company. So I invested in their company, and so they are my joint venture partner today. So from 2000 to 2013, there's a big question mark. So I was really contemplating what to do next, right? After working for so much time. So I wanted to get into financial side. So 2014, I found the courage to quit and then start off. So what I did. So how did that 2010 to 13 idea funneling happen? So I am a big fan of certificate, and for some reason I don't know. So I said, okay, so you have to be certified. So I didn't know what. The only one that was available at that time was what? NSC certifications, right? So I took a bunch of them. I pretty much wrote, I think, almost everything. And I also wanted to look at what segment to focus on, what area to get into, personal finance or what is it. So I'm an NSC level 5 in CMP. Then came the RIA notification in 2013, right? So I went and looked at it, and then they said, okay, CPFA. At that time, CPFA was the certification. I said, okay, fine, let me just go and do it. And it is actually, I know that Keyur sir has strong feelings about CPFA. It's a pretty simple test. Okay, if you are doing CFP, CPFA is nothing. So I cleared that. And then I looked at a bunch of segments. What should I focus on? So I thought, okay, you know what, money is in distribution. So you sell mutual fund, then you get money. You can do wealth management where, you're probably a layer above that. You can do fund management. So I last worked with a company called DE Shah. It's a hedge fund. So I had the privilege to work with Anubhav. So we both were colleagues in the same company. So it's a fund, right? So you get to know how the fund works. So I thought, maybe I should set up a fund, in some form. So I also did financial education. I teach as well. Then I thought, okay, maybe financial planning, because, so what really happens is that, Anubhav can probably relate to it. So in IT company, if you really look at Jan, February time, if you go into the reception of any IT company, so you would see a bunch of, distributors, insurance brokers sitting there. And all these IT professionals will be just coming down, tell me where to sign. Signing and just going by. They won't even bother to fill up the form, right? You just get the signature, pay the check, and then go. So I get into a conversation with them. Okay, what's that you're buying? They said, okay, insurance or mutual fund or whatever. So what is the reason? So they said, okay, what ATC benefit is there? So people don't realize that, okay, so what's the limit? So they have their PF, let's say 20,000, and the remaining 80,000 they pay. Right? So they don't realize that, this 80,000 is really not needed, right? Because next year the PF would go up. Over a period of time, your PF would itself, for many senior professionals, is enough to cover ATC. So then what would you do? So you are taking a long-term liability or an expense for saving tax today and not getting the full benefit for that, right? So people are not thinking about it. Nobody reads the terms and conditions. So I don't know, as IFAs and financial professionals, we ourselves don't really many times read the entire fine print, right? Nobody has, I have asked many people, have you actually gone through the terms and conditions? Nobody has gone through, right? And then there was this other class of, so that's when I thought about financial planning, maybe there's a need which is really there. The last one was family office. So that came from my last experience. So that this I keep telling in all the forums. There are two classes of investors whose investment behavior is non-correlated to economic cycles. One is sovereign funds, which are the country funds, right? India has a sovereign fund, Singapore, every country has a sovereign fund. So they don't care whether it is 2008, they invest. It is 2016, they invest. The other class was family offices. These are private family offices of business houses or wealthy individuals. So they also have enough wealth that they don't care about the economic cycles. They invest irrespective. So 2013 was the the big time when I had to really look at it. So I looked at various certifications. So the content has to be good. So that was one of the conditions. If I go through that certification, can I practice immediately? That was the second condition. Third was the concepts have to be tested thoroughly as part of the test. So any of you who have written NCFM, various exams, many of them are fairly straightforward. You read the book and 90% you can be guaranteed that you would pass. And the fourth, very importantly, is that you have to pass the exam, right? Obviously you go for a certification, it doesn't make sense, you're preparing and not passing the exam. And then there has to be a structured preparation. Then on the license side, in fact, when 2013 RIA notification came, I actually went to the SEBI's Hyderabad office and I interfaced with them to try to figure out, what does it make, how should one go about doing it? I wanted to see if I can do corporate advisory because I'm a CFA, so I can do the corporate advisory part. So investment advisory, which is the personal finance, or maybe corporate also comes in. Financial planning, what kind of company structure is needed. So mine is a private limited company, so it falls under a different category for RIA. Then what is the capital requirement? Because as a private limited company, I need 25 lakhs of capital. And every 3 years I have to pay 5 lakhs. So the capital as well as the expense requirement is higher for licenses. So I looked at all that, then I said, I should do CFP. So that's when the reference came, and it so happened that, in May 2013, there was a session which happened in Hyderabad. So I had the privilege of attending it in person. Wonderful experience. So I'm like a Excel person. So especially if you work in a fund house or a fund management company, so we live by Excel sheets. We don't get out of Excel sheet. You come in the morning to the office, you are on Excel sheet. You leave the office, you are still on Excel sheet. So you are on Excel sheet. So this was a time when actually I remember I walked in a little late into the course because I had trouble locating the hotel. And in fact, Keyur sir had told that you have to work with the calculator. So there was an exam, starting he gives an exam just to test the initial expertise. And I didn't have a laptop and all of that. I was totally lost, how to do it without Excel, right? So that was the kind of a, shocker to start with. And, then of course the next 2 days, that day and the subsequent day, we really became experts in using the, calculator. So May I attended the training, October I did the certification, and December I, was on notice and then came off. So April is when I started, full time. So this is our batch. So Sailesh is my batchmate. He's also from the same batch, come from Chennai. So pretty nice batch, and so that's one personal touch that we have. So I think all the batches, right? You take the photos and you send it to all the participants as well as on the Facebook and other forums. So yeah. So what's the groundwork? So I used to have exactly the same question. So when I interact with my colleagues, who are in the IT industry, so all of these questions they had, right? I mean, nobody seems to be thinking through. So in IT, so there was a recent news article saying that maybe the IT party is over in India, for India, right? So all the IT professionals were looking at Indian IT sector as a party which is not going to get over. But now, people are re-looking at it in the sense, asking all these questions. Wage stagnation is a reality now in India, right? Rising food prices, of course, and I have to talk about it. Rising medical bills. So this is a cartoon which is relevant to US, but as much relevant to India as well. So when we also talk about retirement, people are telling that, either I hear people telling that it's too late to start now or it's too early, right? So when is the right time? I mean, nobody seems to be at the right time to start retirement planning. So today is the right time, now is the right time, right? It doesn't matter when you start. It's just that the requirement is going to be a little different if you start early versus you start late, right? So I come from a typically back office kind of a background. So I have not before 2014, I never had the opportunity to sit in front of a real client and sell something. But you need that selling skills to really get into this kind of a job, right? Somebody who can sell insurance while, jumping down from a plane. So that's what you really need, right? So at the end of the day, whether you call it financial planning or, mutual fund selling, it is a sales job. You are selling your services, you are selling your expertise, right? So this is again back to the thing. So I was particularly interested in the insurance thing, and that is one area where I used to really think, what really used to happen there, right? We had the session on insurance where a lot of discussion happened around, how was it happening? The move from traditional plans to ULIP to back to traditional plans, right? So people really don't understand it, and they make all these decisions. So how to make, so what is the role that we can play to make them understand, this is what the product is, and these are the advantages and disadvantages. It may not be disadvantage, but for a certain individual, it may not be the right product. So you have to be upfront with them, right? So all of these. Then one other gap that I could see was in estate planning, right? So it's very rare that people prepare their will. There are two reasons why people don't talk about insurance and will, because there is a link to death which is associated with it. A lot of people have told that I don't want to think about it because it gives me an image of somebody being dead and all of that, right?
Father's property goes to the children, then why the will is needed?
The children will
Is
fight,
it?
no? I want to
It's-
say
no,
that.
it's not so. No, how is it? I mean,
All
in
respect the
Hindu
father.
Succession Act, does it go to children?
Huh.
No.
Father property.
Grandchildren.
No. It goes to wife,
Grandchildren.
children, equally divided.
Okay, why person mother only must.
I mean, you have no clue what kind of issues come up with siblings. So we have scenarios when we are dealing with especially with family businesses. So that's what our area is, where we work with the wills and trusts and the estate planning. I mean, the cases that come out, which it's not pretty.
Mother also get a part of son's wealth. So that-
Right? Well, there's an interesting YouTube video about somebody's there's a presentation about a lawyer in Mumbai. It's a very good one. I don't exactly remember. So there's the famous case of Sanjay Gandhi. Sanjay Gandhi's passing away. That case was there, right? So people don't understand the nuances of it. So what happens is that Sanjay Gandhi, Maneka Gandhi wedding happened, right? So so usually what happens is that when under Hindu Succession Act, mother gets 1/3. I mean, or 1/3 to Menaka, 1/3 to Indira Gandhi, 1/3 to Varun Gandhi. That was supposed to be the case. But their wedding happened under Special Marriages Act. So when Special Marriages Act wedding happens, Hindu Succession Act doesn't apply. Okay, the act applies to whatever Christians and all of that. That applies. Their mother doesn't have a share. So Menaka Gandhi went to the court saying that
Married to Hindu.
yeah, it's a Special Marriages Act, so Indira Gandhi doesn't get it. But what happens is that if this is a Special Marriages Act between Hindus, the Hindu Succession Act applies. So so these kind of finer details people don't realize. So that's what people don't realize. People assume that it will go to certain people, but when in reality, when it comes up for whatever the will, probate or whatever, then these things come up. So it's not that straightforward. Even if it is straightforward, I mean there are enough cases where siblings fight. So you can't guarantee that. So what's a family office? I'm sure Sailesh also has long experience there in that. So there's a saying across the world in pretty much all languages. The summary is shirt sleeves to shirt sleeves in 3 generations. First generation creates the wealth, second generation grows it, third generation squanders it, fourth generation they have to rebuild it again. And it is there in every language it seems. There's a saying in Chinese, there's a saying in Italian, exactly the same thing. Within 3 generations the wealth erodes. So family offices are typically set up by business families to ensure that the wealth they have created sustains across multiple generations, right? The same concept can be applied to individual families also. It is just that they don't have the enough wealth to create such a office to manage that. So it's the definition is it slightly differs depending on whom you talk to. So you say that it could be a wealth management advisory firm that manages families' private wealth, or it could be a personal CFO for that family. They could be working on building, preserving, and transferring of wealth. But essentially, it's a slightly, it involves slightly more things than a traditional wealth management firm. So many of the big companies, Kotak's family office is probably one of the biggest in India. Now many of the big consulting firms, KPMG, EY, everybody has started family office practice. So this is an emerging area. It's very niche and very new in India. So what are the typical characteristics? So there is an independence. So all these business families would have private banks serving them, right? So the difference between a private bank who is serving a family business versus a dedicated family office or a multi-family office where multiple families are served by the same set of people is the independence, right? So when you are approaching a private bank, so the interest of the bank is to get your wallet share, right? So they manage your forex, they manage your corporate banking, they manage your treasury related activities, they get your mutual fund investments, all of that is included. So we don't know what is the pricing of their services. So here there is an independence which comes in. The other focus is multi-generational, which banks typically don't do, right? The banks don't care 2 years down the generations down the line what is going to happen, what the son or the daughter of that business family wants to do, how do they want to divide the business. So the banks usually do not care, and that's where the the family office comes in. Family office also gets involved in the business transactions. So we in fact that is our entry point typically. So many times what happens is that if you walk into a business family and say that I will manage your wealth, nobody's going to entertain you. So typically we know that they have business needs, okay? They have capital raising needs, or they are looking to acquire a business. So we start doing deals with them, and that is a stepping stone for getting the entry into the personal wealth side. A lot of administrative services are there, like taxation, custodial services, legal services, business advisory. All of these services will come in, and administrative services. So things like building a family constitution, making a family constitution too. In fact, there are enough cases in India where family constitutions either in a formal way or informal way. For example, Apollo Hospital, right? So the 3 daughters of Pratap Reddy runs the show. So they have an unwritten rule that the husbands of the daughters won't get involved in Apollo, and that has been followed till today, right? So those kind of rules need to be explicitly mentioned. Otherwise, later conflicts would come. So what is it? Family offices typically not for masses, so we chose our segment. So it is very important that when you get into what segment that you should serve, you have to choose your niche, and nobody is going to really help you. You have to do your homework and you have to figure out. You want to target the IT crowd, you can target it. You want to target defense, you target it. But you have to pick the segment.
How is the pricing that you said?
I'll come to that. The pricing part of it. That's part of it. And client acquisition is completely word of mouth. I mean, it is impossible for us to put up an ad and no business family is going to call us and then say that come and come for a meeting. So what really helped is that the joint venture partner, they had a lot of business family clients. So we used existing relationships, so it was easy for us to start off. And our plan is, or the way we acquire is, we start with corporate advisory and move to personal finance. How do we retain? So we do deals with them. We work very closely with them on deals. There are multiple deals which happen on the corporate side. So when we do it, so we keep engaging with them at various points, and then slowly the transition happens. So we talk to different stakeholders, and many times, it is typically the CFO. So one good thing, so we work in the SME segment, small and medium enterprises. So there the CFO of the company or the finance head of the company is typically the advisor for the family for personal wealth management also. That's the typical, management style of most of these. So that's one of the, points where we talk. Continuously deliver value. So what we have done is that for all these guys, so we had a problem with RIA registrations, right? So, and that was my question to one of the RIAs earlier, that can I make a financial plan without an RIA registration? So the strict interpretation of RIA regulation is that you cannot. If you are making a multi-product financial plan, you have to be an RIA. Because you are deemed to be advising on multiple products, you have to be an RIA. So we in fact, we took a license of OmniMax 2 years back, and we collected data for our first client. We had a letter of engagement, right? So that is the starting point, right? Client was willing to pay. So there was a letter of engagement with a fee, everything. We didn't get on with it because of the RIA regulation. So what we did was that, so we tried to do something different. So we said, okay, we are not licensed to do planning right now. Let us do a reporting, consolidated reporting. So the client has mutual funds, insurance, everything is there. So what we do is that end of the quarter, we generate the cash on CAM site on their behalf. The file goes to the client. We get it back. We use mProfit to dump all the, to upload all the transactions into mProfit. Similarly, we collect the insurance data, everything. So once in a quarter, we give a consolidated report. Actually, mProfit has a fantastic reporting facility. So now what they are seeing is, in one place they are seeing their entire net worth. And prices are getting updated. For example, if they have equity, so they have option to upload all the contract notes or end of month statements. Let's say ICICI direct file comes, I can upload it there. The issue is that I don't have an execution license. The issue is that if I had an execution license, I would have got the files directly. But here I don't get it. So there is a two-step process. The client gets it, and I need to prompt the client to send it across every month or a quarter, and I upload it. But the value they get is that end of year, your capital gain statement comes out of that, your transaction statement comes out of that, your asset allocation comes out of that, right? So we don't advise right now, then they at least get to see it. The second is that we also play as a manager of manager roles. For example, one of our clients, so recently he called up and saying, JM is contacting me. So we play that role. So any manager, any execution party who wants to sell something to this particular client or a prospect, talk to us. So we become the manager selector. In fact, worldwide, family offices play that role of a manager selection, right? Then we work with execution partners. So we don't have execution, we don't do execution. So we work with others, whomever they prefer, we give that choice. So choose a segment wisely. It is extremely important. It is very difficult to kind of serve a mass and a niche segment. So you have to choose your segment very carefully. How do you get the full or the part wallet share? So many times when we start our engagement, they'll say, okay, manage only my real estate, or take a look at my only this part of the business, or finance. So we have been actually saying no recently to such a request. So without the full wallet share, so one of the recent conversation is that it doesn't help us, it doesn't help even the client, right? Giving a part, of their wallet share. So we have free look period. In fact, all our reporting thing we give free for the first 6 months. Let them use it. If we pull the plug and they miss it, they'll come back. If not, then we need to figure it out. Then continuous engagement, reporting and all of that is there. There has to be a demonstration of knowledge. I think enough has been spoken about it, about writing about the sector or blogs and all of that. So one of our clients is a logistics client, so we have a quarterly newsletter which goes out, what happened in that industry, what are the deals which are happening. So those kind of things are there. On the monetization part, which is a very tricky thing, I mean, you would feel that individual investors charging fee is a challenge. Business guys might pay, but I can tell you the case is no different. Everywhere it is the same. So you have to have that conversation. So we are slowly actually doing it. We had our first conversion, and conversion takes a very long time in family offices. So our first conversion took about 9 months from the time of talking to the conversion. So first is a retainer, where we say that we work as your, let's say, virtual CFO, right? There's an annual retainer. The other one is time and material. Okay, I spend X number of hours, I bill you for this. The third is activity based. Somebody comes and tells that, can you do a valuation for my business? So we do that, and for that activity we charge. Third is the AUM or AUA based, which is there. And there the confusion is that what is the active asset under management versus passive, right? If you add the assets under management, all asset classes, I'm sure in India it will be like 75% real estate. So on real estate, how do I charge, right? It is a passively managed asset. So how do you actually manage, your fee based on that? With businesses, there's another model that we work out, which is exit based. So what we say is that, okay, we are advising you on a deal. We charge for covering our basic expenses now, but we charge on your exit. So maybe 5 years, 6 years down the lane when they exit, which is potentially a bigger exit, then it's an exit based model. So that's the way it is. So the transition has been, even today, I mean, one of the things is that we don't do a lot of, financial planning, CFP type of work, but we want to do that once we go through the RIA. So we are actually, in the process of probably ensuring that we have the sufficient capital in the business. We have to have the 25 lakhs capital, and then, 5 lakhs of fees and stuff like that. So just ensuring that that is in place before getting into it. So till then we will follow this model and then hopefully slowly transition into the the personal wealth, financial planning side.
Good. Any one or two quick questions? If any. I'm sure all are convinced about this concept. So thank you very much. Shailesh ji.